So today we're going to do a bit of an update into Boohoo and why I see Boohoo over the next 2 to 5 years bringing in a 3x to 5x return on this investment. And obviously I'm very bullish on Boohoo. I have shares in Boohoo. I have had shares for a very long time. But yeah, I'm going to go through today why I see this stock bringing this much return. And I wasn't planning on really doing a video talking about the stock. The only reason why I'm talking about the stock is because all that's happened really in the last few weeks and months is that share price has just gone boom, lower and lower. And yeah, I haven't really talked about it because nothing's really changed. I'm still bullish on the company and there's not really any news to kind of bring out and update you guys with, but I've just had a few comments saying can I do an update on it, just talk about it once again. I think really because the share price is moving down, but like I said, I haven't really got anything to fundamentally bring you. I can't really talk to you about, okay, this is what the business is doing because I've covered all that really. So I just want to kind of give my opinion on why I think Boohoo will bring me in some good returns, I guess, in the future, and what I see them doing to kind of bring in them returns. And so yeah, it's not really much of a deep dive into the company, but more of like just kind of number crunching and talking about a few of the issues, I guess, with Boohoo going forward. So yeah, I hope the video is useful. If it is, just hit the like button, that'd be absolutely amazing. So yeah, we're going to go on about Boohoo stock. I think there's two key points that I'm going to make from the start. Is that first of all, when stocks go down, it's always this same thing, and this is obviously the mentality that never works in the stock market, and people that have this mentality are never very successful in the stock market. And that is the mentality of this stock is at 52-week highs, this is the best company ever, you want to be buying this stock, look how well it's done, it will carry on doing well, and everything like that. And there's the people that get attracted into where the stocks that are doing 52-week highs, and that might not be the best investment right now. More than likely the best investment to be making is probably at some stocks that are at 52 close, and you're looking at them stocks and going, okay, this company is getting valued at these sort of prices, but in a few months, a few years time, 2 to 5 years time, where is that company going to be in the long term? And the people that don't do well and don't look at a company and go, can I buy this actually a decent company down here at 52 close at this valuation? Some of those people look at that company going, oh, obviously it's down at 52 close, it's the worst company ever. And I've started to see that with Boohoo a little bit as well at the moment. There's a few people out there that go, oh, of course Boohoo is a terrible company. Look, it's at 52-week close, it's deserved. But you got to remember, like 12 months ago, this company was like a £4 stock. I mean, I can't remember exactly. I have wrote it down. It's about 90p right now. I was recording this video. So you can't tell me that something's massively changed for this company from it to go to be valued at £4 down to 90p. And that's the big thing, is like looking at them overreactions and going, am I picking up quite a decent company up here at really good valuations? And I just wanted to kind of put that mindset there, rather than you want to be asking yourself them questions rather than not following, okay, that stock's up at 52 highs, that's the best company ever to be buying, and chasing that stock when, maybe the ones at the 52 lows are the ones that you want to be concentrating at. And people always kind of like, big a company up when they're at 52 highs and then talk down about a company at 52 close. It happens all the time. And then people generally don't have very good successful investments because they don't actually plan for where that's going to be in the long term, and the valuation it's at. Is this a good valuation? Because more than likely at 52 highs, the chances of it being at a good valuation are probably not that high, and the chances of it being a better valuation at 52 close are probably a lot higher than when they are at 52-week highs. And the second point I'm going to make is, which I'm going to talk about in a little bit more in the future in this video, but is that I am really surprised with Boohoo to see the negativity and how many people are judging this company off the financials right now. It seems like to me that Boohoo is being judged, it seems like to me that people have just ignored what Boohoo has done in like the last 5 years and gone, that don't matter. And it also seems like to me that people have looked at the next 5 years of Boohoo and go, that doesn't matter either. It seems like to me that people are so focused in like what the company's going to do in probably the next 3 months, maybe 6 months. I'm really surprised to see how many people are judging this company over like the current 6-month basis, and not actually judging the company as a whole of what it's done previously and what it will do going forward. I'm really surprised to see how short term this company is being judged on, and even though this company has a short term issue going on, how hard that's affected the share price. Like, I generally thought that people had a bit more common sense here and actually thought, okay, you know what, I'm going to judge this company over the next few year period, not over the next kind of couple of months. And that's really surprised me, and I'm not complaining too much about it because I now can go buy shares in that company at prices and valuations I never thought I'd buy at. Never. And so for me, I'm not complaining too much about it, but I am shocked to see the mentality from a lot of people, and not even just not even retail investors, but institutions that are making them decisions as well, which is absolutely bonkers. And you know what, maybe 5 years down the line I might make a wrong decision, and maybe this company is terrible and doesn't work out, and obviously they look absolutely geniuses, but I generally don't think it will work out with this company, judging off what facts we have here at the moment for this stock. So going on to the reason of the whole point of the video is why I believe Boohoo will 3x to 5x in the next 2 to 5 years. Well, first of all, the big thing is that it's at historically low valuations. That is a big thing. So we're going to cover some metrics in a few minutes, but this is just the damage here on the share price and the market cap. So in 2018, this was a £1.80 stock. It's currently now 90p. Yeah, that's correct. It's nearly over half down value on the share price point of view. And for the people that say, oh, but shares outstanding and share dilution, Boohoo hasn't actually really done that much share dilution. So from a market cap point of view, so in 2018 it was a 2.1 billion company, and this company is now in 2022 the company is now valued at 1.16 billion. So even there, that is nearly half of what the market cap was from 4 years ago. Now looking at that, you're thinking, okay, it's lost a lot of value, and it's even more crazy to see how much value that's lost when you look at the growth and the progress the company has made historically. This is the big thing. This company has a track record of doing very well. So just for example, I put 2022 down here, but actually there's not 2022 numbers out yet. It should be out in the next coming few weeks. We should get another trading update from Boohoo. But going through what the numbers are out there at the moment is, if we go from when the company was last valued at £1.80 and 2.1 billion, the revenue was 579 million. Now that they're valued at nearly half the share price and half the market cap, the revenue is now 1.9 billion. So the revenue has nearly quadrupled in that time frame, and the company is now valued half of what it was previously. And on the profit side of it, and obviously this has a bit of the hit in the profit side of it, and there's potential the profit could go down a little bit lower from here, so you've always got to consider that with what I'm showing you here. But the profit right now is 59 million, and in 2018 it was 31 million, so the profit is nearly double as well. Now obviously the profit is the big problem, is why the share price has been coming down, because that's been hit by a lot of the logistic issues, so that could potentially go a little bit lower. But in the same time, if I went to 6 months ago, the profit was 90 million, so it can work either way here. But what I am trying to say is that if we kind of took away like some of the pressures out there and even counter out, and even then put it down to what they have been doing, not less than what they've been doing previously, it's still massively up. That's the big thing. So you can see here from a share price and market cap point of view, to lose so much value, but so much of the previous growth to be, from 2018 to 2022, in the last 4 years, the progress they've made on the financials is really impressive. And that's the first sign of, okay, this company is massively sold off when you look at them sort of numbers. And then you put it towards like historic metrics as well. So I put it here from a total enterprise value to revenue here. You can see it says 0.7. 2018 it was valued at 2.6, and you can see here this is far below anything that it's ever been valued at. I mean, even if we go to a year ago, you can see that the company is over half the metrics there on enterprise value to revenues. Same on the EBITDA, it's currently down at a 10, and let's not forget the profitability has been hit as well. And obviously normally it's around about a 20, for example. And there's a lot of different metrics that if you wanted to use, you could use right now. So that's just a little bit of a scan over, like the metrics are nearly half what they normally are right now, which is incredible. So this is why I think it can 3x to 5x already from here, is that you're getting a company at historically low valuations, metrics point of view. Market cap's lost so much value. You look at the past growth and how much progress it has been made in that time. And really the big thing that's really only putting the share price down is that, when you look at the company, is it a good company? Well, revenue, it's always been a very good revenue company, and going forward it's still going to grow revenue at 20-30%, which is fantastic. So from a revenue point of view, this is a strong revenue growth company. It's done it previously, it should do it going forward. And if it grows at 20-30% revenue growth, this isn't your average stock. This isn't your average stock that trades at 20 times earnings, for example, because it's growing 3 or 4%. This is strong growth. From a profit point of view, it's historically grown profit. Sure, there's 12 months, a 12-month issue that's currently going and hanging over the profit, but going, previously it's grown its profit. Going forward, it will grow its profit. And then you go from its balance sheet. It's got a really, really strong balance sheet. So when you think about it, it's a good company. It's got revenue growth. It's got the profit growth. It's got the balance sheet. Metrics are cheap. Now, why is this? Why has this stock been punished so much? Why is it down so much? Well, the problem comes down to this. It's the logistic issues. That is the problem, and you've seen so many companies talk about this. And when you are so reliant on an e-commerce company like Boohoo that sends so many parcels out, and logistics are getting hit, obviously that's going to cause a massive problem for the company. And there's a few other little mini issues that are in there as well, don't get me wrong, that a few people are pointing to. But a lot of the problem here is currently logistic issues, and you've heard a lot of companies come out and say there's massive problems with logistics. And it's same for the Boohoo themselves as well. Now the problem is that these logistic issues will sort themselves out over the next 12-month period. Either they calm down, or the next big thing is that what happens is Boohoo then start raising their prices, and those prices cover the costs, and then what happens is Boohoo go back to doing good margins. When that happens, then what will happen to Boohoo is that when people see that profit coming in, which is all short-term problems, when they see it coming back in, then what's going to happen in the next few months? People are going to realise, oh, but now they're still carrying on revenue, profit sorting itself out. This company comes back at being, so cheap valuations. So, for example, right now, I think in the next 12 months that problem is going to be solved by Boohoo. So let's just say, for example, in 2023, which obviously sounds crazy, but that's only going to be about 12 months away from now. Let's say that Boohoo still grow, 20-30%. They start sorting some of these problems out, and they go back to putting a decent amount of profit in. Let's say they do 50 million profit. The thing is right now is if Boohoo go do 50 million profit and grow 20-30%, that's going to put them down at 24 times earnings. Now this company already shouldn't really trade it down 24 times earnings. It's up for debate what it should trade at, but I would say easily it's a lot higher than that, because it's a higher quality growth company than your normal average company that grows 3 or 4%. And then you start working out, okay, what's it going to do in the next kind of 2, 3, 4, 5 years? So if you say between 2024 and 2026, they actually start doing 100 million in profit. At the moment, you'd be buying Boohoo, and if it does that, it'll be down, and it doesn't move in share price, you're down at 12 times earnings. And then you're thinking, well, what happens if this company trades at, at least 30 times earnings, which I still think is quite cheap for the company. There's plenty of upside there. And then if you start going a bit longer term, because obviously going to 2024, 2026 is a bit more of a medium target. It's 2-3 years out, I guess, really now. If we start going long term, 2026 to 2028, let's just say they go to 100. I think that's quite a sandbag number as well. But let's say they go to 120 million in profit. That's 10 times earnings. 10 times earnings. So, yeah, that would be incredible at that sort of, if they do get to them sort of numbers. So for me, when I do look at Boohoo, the only problem you have here with this company is that it's not really factors that are. It's not really a company issue. Sure, they could have maybe handled this a little bit better, I guess. But when you look at this issue that's really hurting the profit, it's really not really their problem. And this problem is very much short term. It will resolve itself in the next coming few months. And then when you look at that and you resolve that issue, when Boohoo goes back to putting in 20-30% revenue growth, the profit starts moving back in the right direction. I mean, 50 million isn't, prior to what has happened with a lot of the profit issues, this company was doing 100 million. Like this number here isn't even like optimistic. It's not even being crazy. 50 million. 2 years ago, this company was doing 100 million in profit. That's quite a sandbag number. And same for here. I put 100 million here. Let's not forget they did 90 million last year, right? 90 million profit. And I put 100 million here in 24 to 2026. Now, considering they got to 90 million a year ago, you think about this is in a 2 to 4 year time frame. Is that here? You start thinking that's quite achievable, really. All these numbers that I've run here are very easy metrics for Boohoo to go to, especially if you consider they sort this issue out and they continue growing at 20-30%. You imagine that revenue going back down to that bottom line. And then you've also got a lot of the Debenhams to factor in, a lot of the beauty segment as well. I'm sure Debenhams would probably be higher margin products, I would guess, as well. You combine all that together as well, so they're going to probably have better profit margins than what they did previously. You start combining all that together, a lot of these numbers here I haven't done here are not really like, crazy numbers. I'm not being crazy optimistic here. These are quite okay suggestions for them to get to. And like I said, when you start getting to the point of view of they do 100 million profit, if Boohoo do 100 million profit, this company is easily going up to a £3 stock. Easy going up to a £3 stock. But then you start going, okay, it could actually go back to being a £4 stock, maybe even a £5 stock. And then you start going even longer term. You start thinking, okay, they could potentially then go to maybe £6-7 stock, potentially £8. For me personally, I've always said long term, I see Boohoo being a £5 to £8 stock. But that's obviously towards like the 5-year end of the range. But even in the short term, I can easily see if they do these sort of numbers and being a £3, £4, £5 stock. And when you kind of consider this stock is down at 90p, and they start doing these numbers and it starts commanding a lot better valuation, this is easily going to be a £3, £4, £5 stock in my opinion. So yeah, obviously the only kind of problem that I ever see Boohoo ever not getting to the numbers, I guess, is if these problems stay, which would be so hard to see, because that would cause problems for like nearly every company out there, and every company would eventually raise the prices and sort it out. This is a short-term issue. It's not going to be a long-term issue, so I don't see that being a problem for Boohoo. The only problem I ever see with Boohoo is if they're not popular anymore, if the products don't sell, if there's a lot more competition that just kills off Boohoo. But even then, I think Boohoo will be able to reinvent itself and carry on doing how because it's got the past, previous history of being successful. I think they would easily be able to reinvent themselves. So yeah, that's just me talking about Boohoo and why I'm still bullish on it, and not really a bit of a deep dive. I know sometimes people get a bit bored of me like talking a bit of numbers every now and then, but I haven't really got too much news to talk about, I guess, so I've had to do this to kind of say why I still believe in it. So yeah, we'll see what happens with the trading update, which should be sometime soon. I won't be too surprised potentially with how short term people have been, and I would expect that trading update to probably be a bit negative, I would guess. We'll see. It could hurt the stock a bit more in the short term, but when you start going 12 months out, and that's not even that long term, I see it sorting itself out a little bit then. So yeah, we'll see what happens anyway. So I hope you enjoyed the video, and for you guys that wanted to see a bit of a Boohoo talk, I guess, as well. So yeah, I'll catch you in a bit.